One of the things I've noticed when I meet with people for the first time, potential clients, folks I haven't worked with in the past, is the vast majority of people are not prepared for negative things that happen in the stock market, negative things that happen in the economy way too often. They're common things, and unfortunately, people aren't prepared for it. What do I mean by this? The term black swan, these are things that are only supposed to happen once every 100 years, once every 500 years. But you know what? Black swan events have a tendency, in my experience, in aggregate, of happening about every 10 years. Think about it. We had the dot-com bubble burst in 1999, 2000, and that lasted a couple years. And then 10 years later, we had the great financial crisis, 2007, 8, and 9, when housing collapsed, banks, we were fearful banks were going to collapse. And then a little over 10 years later, 13 years later, we had COVID, a global pandemic, things that aren't supposed to happen. Are we going to have another pandemic? I don't think so. I certainly hope we won't. But could we have something happen that's really scary, that causes the stock market to take a big drop down that many people are not prepared for? I think so. So in today's video, I want to share with you some things you can do to prepare for these negative events that unfortunately are happening more and more often. And we need to be prepared for them, because if we're not prepared for them, we're going to do things likely that we may regret later in response. The time for making a good decision is when the landscape is calm, when the battlefield is calm, when there's not a battle taking place. And that's the purpose of this video. So the first thing is, are you set up if the stock market were to drop 20, 30, 40%? We've just, as I record this, finished a period where over a 2-year period of time, from the October 22 lows to the October 2024 lows, over a 2-year period, the S&P 500 was up 60%. I don't know, I don't have a crystal ball, but anything that goes up by 60% in 2 years, in my mind, could also go down by 60% in 2 years. So would you be prepared for something like that? In 2022, we saw interest rates rise, and people got hurt both in their stocks in 2022 because the interest rates were slowing the economy. It put pressure on, in 2022, tech companies and other companies in general. So people's stocks were down, but so were their bonds. And usually those kind of move in opposite direction. So could you withstand a period of time? Let's say that inflation comes back again. It certainly could happen. And if that, and frankly, this is not political, but there's many very smart people that would say, because of the tariffs that are being discussed now, that could be inflationary and could work against what we've seen with inflation rate going down again. I'm not making a call on this. There's lots of times that smart people have predicted something was going to happen. It didn't happen. Look at Trump's first term. A lot of people said the tariffs were going to be a bad thing, but you know what? The stock market in 2019 ended up being one of the strongest years that we had seen in a long, long time. So none of this is necessarily cast in stone, but I want to make sure you're prepared. And I want you to prepare ahead of time. So what can we do? Let's look at your portfolio. Let's look at your long-term stock allocation. That is going to determine 80%, in my opinion, of your investment success. And it's not unusual that when the stock market has had a run like we've seen over the last 2 years, for people to be skewed more heavily towards stocks than what their long-term allocation calls from. I lived in a ski town for over 25 years, and we call that being ahead of our skis. We're in front of our skis, and bad things happen when you're in front of your skis, and frankly, worse thing happen when you're behind your skis. So neither one of those are good, right? If you're overexposed to stocks, you can, that pain of the drop of the market can be quite painful. But if you're too behind on your skis and you don't have enough stock exposure, you know, you can trail inflation. You could be leaving a lot of chips on the table. They say that, and I agree with this, time is the most powerful tool that an investor has, right? Because of compounding, letting your money work harder for you than you had to work to put money in. And if you're back on your skis and you don't have enough stock exposure, but if you're 20, 30, or 40, you know, you're giving up a lot of upside potential over the next 20, 30, 40 years. I don't know your situation. This isn't advice specific for you, but you do want to make sure that you get that asset allocation right. Enough stocks in your portfolio that you're getting enough of that upside to beat inflation and to grow your portfolio. And when you have time on your side, using time as the buffer for that volatility. Right? Day-to-day volatility in the stock market is all over the place. You look at a monthly variance, it's a little bit less. You look at quarterly, it's a little bit less. You look at yearly, it's a little bit less. You look at it over 5-year time periods, you look at it over 10-year time periods, it's quite a bit less. The odds are dramatically in our favor when we look at longer periods of time. So making sure we have enough stocks in our portfolio, but not so much stock exposure that if the stock market were to have a nasty correction, that we get scared and we sell out of our stocks. We become a forced seller in a down market because of the angst that the down market is causing us because we don't have the right asset allocation. The right time to examine your asset allocation is when the stock market has been doing well. And you can sit down with a professional, you can have a discussion. You can be calm, you can be collective, you can be rational and think through what is the right asset allocation for you and your family. Again, I urge you to talk with a professional about asset allocation as well as looking at your retirement plan and how much do you need to save. And could you retire, you know, what age could you retire? Could you retire now? What are the trade-offs you're giving up? What do you gain if you continue to work another 5 to 10 years? And what do you lose, right? You lose those 5 or 10 years of likely healthy, active years in retirement. As a retirement advisor for over 20 years, I can tell you one of the biggest regrets people have is after they've lost their health. They thought they were going to be healthy for a lot longer than what they ended up being. And they look back and say, why didn't I retire when I had my health? Maybe they were in their 50s. I could have retired in my 50s, but you know what? I wanted to go from this amount to the next amount. It's usually a doubling. Somebody has 500,000, they want $1 million. If they have $1 million, they want $2 million. If they have $2 million, they want 5. If they have 5, they want 10, etc. But what do you gain by that? You know, oftentimes, what people gain is they just have more money at the end. The vast majority of us are not going to spend the money that we have saved for our retirement. Now, we want to have a buffer because nobody knows how long we're going to live. But to the extent you have legacy goals, thinking about, should you wait until you pass away to help out your kids? Or should you help out your kids if you have extra? Should you help out your kids when they're still young enough that they need help with the down payment for a house? Maybe they want to go to grad school. Now, if you don't have a buffer, don't give up that buffer. You know, only things above and beyond that, because you know what? They have loans to buy a house. They're called mortgages. They have loans to go to grad school. They're called student loans. But you know what they don't have loans for? They don't have loans for retirement. So I want you to be prepared both for a market downturn, but for everything else in life. Be prepared for when you're older and you no longer have your health. I want you to look back and say, I made the right decision for me and my family. I was thoughtful and I was deliberate, and I chose when I was going to retire. And if you want to think more deeply about when do you retire, that's why I made this video up here. Why waiting to 65 to retire might be a big mistake. Thanks for watching this video. I'll see you in the next one. Bye-bye.